on we go. As you see, boosting P&C revenue through life insurance. We'll talk about why to sell life. A lot of property and casualty agencies don't, because sometimes they're intimidated, sometimes they don't see the importance. Lots of reasons why, but we'll get into that. How to create leads. And then third, how to sell it, or let us sell for you. That's actually one of the things that's unique about Penny, is our ability to even take that off your plate. First on the why is retention. We'll get into the more, I think, important why from a moral and personal level. But just for profitability, you're running a business, and obviously that business needs to be profitable. You all know the stats on monoline versus dual line on retention. Your whole life is built around renewals and building up that block. And if you do monoline, you only have a 50% retention. Dual line is 90, which is great. It's a massive improvement, but still, every year you're going out and having to hustle to replace 10% of the block you just lost. So if you have $1 million block, well, that's 100,000 brand new premium. You've built your block of business to a 10 million annual premium renewal. That means every year you've got to go hustle $1 million of brand new premium just to not go backwards. As you see on that graphic, adding life, it bumps it to 99%. So basically, it builds a moat around your renewals. So forgetting the rest of what we're going to talk about, if you want to grow your revenue block and not go backwards and not have to work so hard to make that happen, make sure you sell life, because that bumps it up to 99%. That was something Allstate drilled into our heads. Another reason is an immediate revenue boost. Several states like California, Florida, and Texas, right now it's almost impossible to write new homeowners business. I have agents, several agents in California who they're in total limbo, wondering how to make money, not only to have renewals that are going away because so many companies are canceling in their states, but on top of the lower revenue they're still having to pay a lot of their people the same. And so selling life is offsetting that. Now, if you're not in a state where you're having that happen, great. That means that it's even more of a boost to your revenue. Actually, one of the things that I'll show you in a little bit is something that I borrowed from an agent in Denver. He had a book of business, I want to say it's about 5 to 7 million. And being Allstate, all it was personal, not as much commercial. Those of you with commercial, there's quite a bit more there as well. In fact, those can be some really nice cases. Anyway, with about a $5 million block of business, simply instituting one of the tools that I'm going to show you, he sold about 185,000 of life premium a year. Now, they didn't pay this kind of commission, but in the real brokerage world, most products are going to pay between 60 to 100% of first year premium in commission to the agency, which I rounded off to 80% between the two. And that is 148,000 of extra revenue for the agency. And that was simply instituting something new into their procedures, which was quite easy, just a matter of creating a habit. Now, let's talk about the reason I'm passionate about life insurance, and that's what it does. I'm sure you all see on Facebook or Instagram these GoFundMes when somebody loses a family member, and all it is to pay final expenses, not even to replace their income. Every time I see one of these, my heart breaks, and part of me wants to say, see, people, this is why you get life insurance, to replace your income. What's going to happen to this family? Now, obviously, that's not the appropriate response to be sensitive at that point, but that's the reality. Is if their homeowner and car insurance agent had talked to them about life insurance, we wouldn't be seeing this. So what all happens? Well, besides those funeral costs that people are trying to get right now in front of them, bigger financial effect, people lose their mortgages, cars get repossessed, widows inherit the debts, and of course, children can't go to college. It creates poverty, especially in women. Among widows without life insurance, 39% struggle to meet basic needs within the first year. And more than 75% of widows living in poverty had not been poor prior to the death of their husband. I love to tell a story when I'm speaking with clients about a scenario with an actual friend of mine back in my 20s, of all things, 30 years ago. Uh, Lisa, she was married to a youth pastor. He didn't make a ton of money, obviously, as a youth pastor, but he made a point to have a $500,000 policy, which in his 20s was pretty dang cheap. And they're still quite cheap, even cheaper. Um, he ended up with cancer and died in his 20s. So she was left with two little girls, one a baby, one a toddler. And I think of this in two different lives that could have happened. One life was she had to sell the house, work two, maybe three jobs. So not only did the girls lose their daddy, they pretty much lost their mommy because she would have worked two or three jobs and lived in a lot less desirable of a neighborhood, going to a lot less desirable schools. Um, Perhaps maybe she would have settled for a guy that she probably wouldn't have really married, but things got really tight. Um, so you needed the two incomes to raise the kids. Um, who knows if her uh, past husband would want that guy as the daughter's dad? But thankfully, he had the life insurance. And so what actually happened is that she was able to take off work while I'm sorry, not to take off work. She was able to stay home with the kids until they got to school age, and in the meantime, make a plan for her own education of what she was going to do once the girls were in school, and stay in the same house in the same neighborhood. Those girls ended up going to a good school. Down the road, about 9 or 10 years, she found a fantastic guy that her first husband would have been proud to have raise his daughters, and life ended up being hugely different. All because he had about a $20 a month premium on his term insurance. So sorry to take so long on that, but that is just the reality of life insurance. People talk about life insurance and their eyes glaze over because people selling it talk about what it is. The reality is it's what it does. And I'm sure most of you have some kind of story that you know, for good or for bad, of where it could have saved lives, literally. So let's take a look at risk comparison. Chance of total loss of a house is minuscule. I tried to find stats and no AI anywhere was able to come up with that percentage. But 5% of people who have homeowners will make a claim in a year, which is higher than I thought, but an average of about $15,000. Um, Chance of a total loss of a car is 1.6% in a year. So we're making sure that we got our home and our car covered for much smaller chances. The chance you'll die, I didn't have to Google this one or find it on AI. That's 100%. So now, obviously, the key thing is when. So I also looked up and researched that for a 30-year-old couple, husband and wife, at age 30, um, the chance of one of them dying before 65 is 30%. Well, if they're a 30-something-year-old couple and they got a 30-year mortgage note, well, 30% chance one of them is going to die before that house is paid off, let alone whatever other income is needed.